Hello, everyone, and welcome to another edition of the Forex Technical Market Update for the 1st of September 2016. We're in a new month, and as I said yesterday, the markets can get a bit more volatile now. More traders are coming back into the market, and we should see some more moves in the next couple of months towards the end of the year. Now, what we're going to speak about today is we're going to continue the theme about pivot points. Yesterday we spoke about the importance of the monthly pivot points and the weekly pivot points, and I'm going to show you an example here in the British pound about pivot points and what you can look for. But first, let me just take a look at what's happening in the markets. We see that the euro is rallying slightly this morning, and it's rallying again off of a weekly pivot point number. The weekly S1 is at 111.32, and as you can see, this provided some support here in the euro. Now, the non-farm payrolls report is coming out tomorrow, so we could get if it's a strong report, we could get a rally in dollar that takes it below this weekly S1. But another pivot point to look for would be the weekly S2 at 110.69. Conversely, the monthly pivot points are out, and we see that this 113.36 level on the euro is where the monthly R1 is. And as you can see, it also coincides with some previous highs in the market. So if the market does rally up to this point, we'll be keeping a close eye on this 113.36 level. Taking a look at the Japanese yen versus the US dollar with the pivot points active, we see that the market went above the monthly R2 or the weekly R2 and found resistance up at the weekly R3 at 103.94. So that pivot point number was providing some resistance with the Japanese yen. And what you can also look for is a confluence of indicators. You also see this is a 4-hour chart of the yen versus the dollar. We also see that this coincides with a with a trend line. We see that there's a downtrend line here. We had the weekly R2 close to the trend line. The weekly R3 close to the trend line, and that provided some resistance. So sometimes when you are looking for support and resistance levels, it's good to look for different indicators. And the different indicators you can look for are trend lines, pivot points, and Fibonacci retracement levels. Looking at the Canadian dollar versus the US, we're still in this triangular consolidation pattern, and the market is just looking to break out of this quagmire it's in. If we do get a close above this 133 level or so, that would be fairly bullish for the US dollar versus Canadian dollar, and we could see some further gains. If we break down below the 126 level, that would be bearish, and the next area for testing will be 124. And if that's taken out, we could be going down to 120. So the direction of the Canadian dollar versus US dollar, it just depends on what happens with this triangular consolidation pattern here. Looking at the British pound, and this is what I'm going to look for with the pivot points. Okay, we have a chart here of the British pound versus US dollar. It's a clean chart, no trend lines, nothing. But what we can see is that there are some previous highs here. There's a previous high at this level. Let me draw a red line here. There's another high here. There's another swing high here. Okay, so we have those swing highs. Let's go down to the 4-hour chart and see what exactly is happening here. Now, as you can see, this first swing high level is the swing high here, denoted by the red line. We see that this coincides with the monthly. Let me just drag the chart over a little bit. This coincides with the monthly R1 at 133.85 and the weekly R2 at 134.04. So this area, if we do get a spike in the non-farm payroll report, this area could could act as resistance. And what we'd want to see, if we're going to sell at this level, we'd want to see the market test the level, and then we get some form of a sell signal, and then that would be an indication that the market could be going down. So to set up this trade, what we do is that we identify the level, its previous resistance, checked, monthly R1 and weekly R2. So those levels are checked, and we are going to see if the market, if it comes up to this level, if it tests the level, and then if we do get a sell signal, that could be an important sell in the value of the British pound versus US dollar. So when you are looking for trades and looking for things, this is how we look for setups in the markets. Remember, in order to identify good trades, you have to look for these setups beforehand. You can't be reacting to what the market is doing now. You go in with a specific plan and you identify these setups beforehand. Now, what will happen if the market just goes through these pivot point levels? Then we may not get a sell signal, and then we don't get a trade. But we will just have to be prepared for this trade. Not every trade that you identify will actually be able to come to fruition, but at least you have a plan. So that's a plan for the non-farm payroll report in case of a rally. And that was just an example of how to use pivot points and previous areas of support and resistance to plan trades. If you would like some more information about this trading philosophy, please sign up for our webinar. It's very educational and gives you much more detail about how to trade using purely price analysis and looking at what prices are doing around various levels. If you'd like to sign up for that webinar, click on the link below this video to sign up. Thank you very much for listening, and I hope you have a wonderful day.